Good morning, everybody. Welcome to Morning Markets today. A couple of things that I wanted to share with you that we had been discussing at our morning meeting this morning. The first of which is just the improvement in the investment grade corporate bond market in the US that we've seen over the past 3 to 3.5 weeks. If I go back to the middle of the crisis and the dislocations that we were seeing in markets, it was very, very difficult for high quality companies to be able to issue bonds in the US market. If we fast forward to the end of March and then the continuation into the beginning of April, what have we seen there? We've seen that market reopen quite significantly with over $200 billion of issuance into that market. And that's a significant increase year on year in the region of 30 to 40%. That gives you an indication just how the financial dynamics have changed and the liquidity dynamics have changed as a result of the action that the Fed has taken in the US. And indeed, we've seen similar trends if we look at both UK and European corporate issuing markets. So that's a positive and gives an indication of some normal functioning return to the market environment. That's also feeding through into volatility. And if we just compare and contrast how volatility has evolved over the past couple of weeks, we've seen a reduction from very elevated levels in the VIX index, which looks at equity market volatility and in particularly the S&P implied 30-day forward volatility. That's declined, but it's still at elevated levels. So still above 40 when a more normalized average level for the VIX index would be about 18. That contrasts with the volatility that we've seen in the bond market, which has declined quite significantly and has returned more to what one would say is its normal level of the recent past. And that's an encouraging sign. And again, that speaks to the activity that central banks have taken to both support the bond market, but also to ensure that there's sufficient liquidity in that market to ensure its normal functioning. So that's a real positive. Other things that we touched on, I suppose, the lack of information coming out from the European finance ministers meeting about a joint response to COVID-19 in the terms of the debt issuance and how that would be issued at a European level. And we'll wait today again to see if anything comes there. But again, this really is illustrating the challenges that Europe faces, that even in the face of a very significant and challenging health crisis, it's not able to come together just yet with a package that would support the overall economy. And then I think the other thing just to touch on, we spoke a lot about the oil market in these videos and within our team over the past number of weeks. We saw ExxonMobil, one of the largest integrated major oil companies in the US, come out with some numbers last night. Interestingly, they're reducing capex by about 30% to $23 billion. This brings them into line with some of the action that we've seen being taken by the majors in the UK, the likes of BP and Royal Dutch Shell. In addition to that, Exxon are looking to reduce operating expenses by some 15% year on year. And this is in the face of quite a significant demand drop in the oil market. What they've said is that they think oil demand will drop by about 20 to 30%. And that gives you some context in which to think about the challenges that we're seeing in the oil market today. Primarily, production's about 102 million barrels per day, demand on a daily basis about 100 million barrels per day. But if we think about reducing that by 20 to 30%, that gives you an indication of the oversupply that's in the oil market, and hence why oil prices have fallen significantly, but also why OPEC, Russia and the US are thinking about ways to try and stabilize the oil price given the challenges that's posing into the corporate market. And you can see that with the changes that Exxon made overnight. Again, from Exxon's perspective, significant reductions in expenditure, but they have suggested that they also want to maintain their dividend payments. So that's a positive from that as a result of the aggressive action that they're taking. That's it for today. Hope you find that useful, and I'll speak to you again tomorrow. Many thanks.